Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the rise in wholesale interest rates took another spurt higher over the weekend. But first, in the US, consumer confidence surged in early December to just 1/10 of an index point below the 2015 peak, which was the highest level since the start of 2004. The surge was largely due to consumers' initial reactions to Trump's surprise victory. When asked what news they had heard of recent economic developments, more consumers spontaneously mentioned the expected positive impact of new economic policies than ever before recorded in the long history of the surveys. To be sure, an equal number volunteered negative judgments about prospective economic policies, but the frequency of these negative references was less than half its prior peak levels, whereas the positive references were about twice the prior peak. Also in the US, sales at the wholesale level came in much better than expected for October. And more importantly, wholesale stocks declined, which means the build back will be very positive for the fourth quarter GDP numbers. Moving to China, last week we reported the surprisingly strong language a regulator there used to chastise the Chinese funds management industry. Well, it seems that another official has taken to task the Chinese insurance industry in similarly strong language. For generations, Chinese business people have regarded official regulations as being there to be gamed, but no more it seems. The insurance official said skirting regulations was tantamount to committing a crime. It will take Chinese officials a long time and with many business people in jail to change the culture of disrespecting legal regulations. In the meantime, those vulnerable to exposure will be urgently trying to get their dubious gains out of the country. The flood of money out could become a torrent before officials get on top of this corruption. And on to Australia. As we reported over the weekend, the Australian Tax Office released details of about 2,000 large taxpayers, and that showed that just 8 of them, and that includes the 4 pillar banks, paid most of the tax for this group, and about a third paid zero. We don't have this level of transparency here, and many of the companies involved in Australia are lobbying to end the disclosure. In New York on Friday, the US Treasury 10-year yield rose strongly and is back up to 2.47%. That is a 15-month high and will have a cascading effect on our markets today. Oil prices are higher too, now just over $51.50 for the US benchmark, while the Brent benchmark is now just over $54.50 a barrel. Russia is trying to get OPEC to hold its oil output cutbacks. It might work, but Russia has form at being disingenuous at this. The last time it promised to cut back, it backdoored OPEC, and OPEC remembers. But low prices are a galvanizing theme for producers these days, and with the head of ExxonMobil in Trump's cabinet, they sense a rare opportunity. And US frackers are responding quickly. The US rig count jumped to 624 last week, its fastest weekly rise in more than 280 consecutive weeks. The gold price was down another $10 in New York on Friday and will open the week at $1,160 an ounce. And the New Zealand dollar is a little lower at 71.3 US cents, and on the cross rates it's at 95.8 Aussie cents, and against the euro up to 67.6 euro cents, an 18-month high. The TWI is at 77.4. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.